This is our video Forex blog for January 10th, 2011. One of the best things to start doing when you're trading is to look at our currency meter and find the strongest currencies and buy those versus some of the weakest ones. Today, the US dollar had a weekly monthly trend that was up and pretty decently intense strength today in real time. And you want to trade that against one of the weaker ones. As you can see, at the beginning of the day, the Australian dollar, the weekly monthly trend's down, the real-time trend's down. So basically, you'd be looking to sell the weak Australian versus a strong dollar. As you can see last night, the daily and weekly was down, and when the price broke from above to below the hourly right here, you might have got into a trade right here. Usually the first time down, you get a counter trend move up, and when that didn't occur, it was pretty likely, because the weekly trend was down, that the market's going to fall. This was your projected profit target, over 20 pips away. You might have got out of half your trade there and even some other. But once that broke, the next support level was this fib area down here and another monthly pivot. But you can see the price fell about 40 pips overall, and on this counter trend move up here, once a support level gets broken, it tends to become resistance. This was also a pretty high probability trade. Not so much that we didn't have off the charts extreme intensity. Anything at and above the 20 line is extreme and usually continues. So when the market came down, it's at the lower containment band here. It wasn't incredibly weak at the time. I would have got out of the second trade right there. But the currency meter really lets you see, which pairs to focus on. Last night also the CAD was weak. However, this was not nearly as high a probability trade as the Australian, because the weekly and monthly was down in the Australian, whereas the longer term trend of the CAD is strong. You could still give it a shot, but because sometimes super strong currencies that have been up a lot may fall for 1 to 3 or 4 days, and you might have extreme weakness during that pullback time. So from 1 o'clock to about 5:30, the weak CAD. You could have also bought the super strong dollar versus the CAD. And as you can see, the price is above the hourly. Last night it broke above the hourly and went sideways. When it broke out right here, you might have got in a little bit early. Your stop was initially underneath here, and you have all this resistance area above. Because the longer term trend is down, you're not going to necessarily expect to make more than that, so this makes a great place to get out of your trades with a profit somewhere up here near 55. You might have got into this trade right here at 40. First trade might have only made 15 pips, and normally we find this trend and then we look to buy pullbacks as well. I'm not sure how many people would have bought this pullback, because this is a profit target, this is a profit target, and you're going against the longer term momentum, and that up move didn't really have that much incredible upwards momentum. So I probably wouldn't have taken this trade myself, but obviously the trade worked. When you have a longer term trend that's down and the price double tops without that much momentum, this is a perfect example of double top with divergence. Because the longer term trend's down, one of the best and highest winning percentage odds trade was looking to go short right here, and usually price reverts back to the hourly moving average. So you had a 44 profit target, you got in this trade somewhere up here near 80, and that's a trade where you can risk 6 to 10 pips with a very high chance of making 40, and it actually fell through that hourly and came down here and stalled, and you had a counter trend buy signal, so you get out of your trade right here. Absolutely huge 50 pip win while risking only 10. And that's the real secret to trading: small losses, big wins. Another currency that you might have traded last night, the yen wasn't nearly as strong as the dollar. The weekly trend's down, the monthly trend's up. You might have also sold the weak Australian versus the yen, but it probably wouldn't have been as high of an odds trade as the Australian dollar. But you can see, nonetheless, the weak Australian and slightly stronger yen, it trended down, and it went down to our trading zones. Didn't have that much momentum. You might have taken this short here and got out at the double bottom right here. I wouldn't have held on down there to our fib level and the 82 level. Some of the other trades you can take when you see a very strong British pound from 5 to 7 and from midnight to 3, you can trade the strong pound versus the weak Australian also. Let's just bring up an pound Australian currency. just to show you how the currency meter works. Some days you're going to get the dollar pairs and yen pairs be the best trades, and other days you might find pairs that you don't trade too often. But the super strong pound, weak Australian, 1 o'clock, here's a nice little pullback trade right here, and you can see it went up from 56.20 all the way up to 76, and then it pulled back again and went up, pulled back again and went up, pulled back again and went up. Kept making higher highs. You might have got into this trade here with a loss, got into this pullback here and made money. And usually fib two-wave pullback trades are pretty decent. So when you had this pullback trade from here to here, notice it went right to the fib target. This is a very high probability trade, especially after having been so strong. The super strong pound, weak Australian, fib two-wave pullback trading system is usually 75% accurate in those instances. And you can see here it shot up about 30 pips. I'm not sure I would have bought the double bottom right here because I made a slightly lower low, but that trade also worked.